happens. Now, we're gonna have on Friday, let me see, Friday, we're gonna have core retail sales month over month and retail sales. So we're gonna want to pay attention to that on Friday as well. Now, let's look, we're gonna take a look at the charts and we're gonna see where, okay, let's start off with SPY. Now we're gonna look at the whole sector rotation and we're gonna see where the money has been rotating to and where's money flowing in. So last week or 2 weeks ago, we were talking about this pie chart, right? Every time we took some nice dips, every time we marked them down, and we took about 57% for the 2008 crash. COVID gave us a 35% crash. The Fed rate cut 2022 gave us a negative 26% crash. Trump tariffs last year gave us a negative 21% crash. So now we're expecting, this is what we mapped out about 2 weeks ago, which is already on its way. And I'm on the monthly right now. I'm just looking at the monthly. And we're looking at a possible 10% drawdown, which will give us structure to last year's before the market crash high. So this is what we're looking at on SPY. Now, we have here for the weekly levels, the 657.93. Notice how the 200 day is right there. So you're gonna want to see a reaction here. Now, when you look at the fear and greed, it's letting you know there's a structural capitulation detected, high probability of support three liquidity test. What does that mean? So now, when I'm looking at the daily levels on SPY, you already see where we are. We're in support two. The 200 is right. So there's a liquidity test, a possibility. It's not going to happen 100%. There's a possibility that you're going to get a test of liquidity below S3. So start preparing yourself. Doesn't mean the market is just going to crash and burn, but start preparing yourself because we're already on the go. We're already starting to distribute. So now we got the 200 day. This is a make or break moment right here. If not, we're going to get our about 10%. Look where our 20 is sitting, right at the structure level on my monthly. If I go to the weekly, look at the last week candles close. That, look at the volume and look at last week's candle closing. That is as bearish gets. Now, we are getting to my anchored VWAP, right? From the lows of the Trump tariffs. That's another make or break because look where my 50 day, my orange MA right here, this is my 50 day and it's lining up perfectly with the Trump tariff lows. That's going to be another make or break. We get that. We get down there. That's about a 7%. We almost at 10% correction territory. So we're gonna want to watch this. Don't make any irrational decisions on SPY right now. Let the market come to us. We'll have chances for these type of big big company stocks. We're gonna have some nice swing setups coming down the pipeline. Now let's look since we're under the sector rotation, right? Let's look. We're not gonna use this window right now, so let's put this down and let's give us some room. Now we're under SPY. I'm here under the top 10, right? Look at the top 10. These are the heavyweights in SPY, right? Okay. Let's look at, let's say, utilities. Let's see who moved. Look at this. This is sector rotation, guys. That's a prime example. Okay. So now we see where money is going, where it's leaving from, and where it's going. People are fleeing those high growth, big cap stocks, and they're fleeing to protection. Okay. So now this is utilities. This is the major. It's utilities is like the ultimate yield play. It's one of the one or the most defensive sector in the market because people at any time they can stop buying iPhone, but they're never going to stop buying ultimate consumables. You got to pay for electricity. You got to pay for water. They pay you dividends. So this is the ultimate yield play. This is safe haven right here. So your portfolio should always have stocks and utilities for any moment in the market. You always want to be balanced. Okay, there's a recession playlist. There's fear in the market, there's a fear playlist. So now we see the money just doesn't disappear into thin air. It rotates. It goes somewhere else. Where is it hiding? Is it in cash? And some is in defensive plays. So now let's look. I want to do a quick check on tech, right? And we're gonna do something here. I'm gonna get a three layout. Yep. Okay. And I want to do a year to date daily. I want to see the story of the market. And we're gonna get QQQ right there from January. We're also going to get XLE. Okay. Where is to go to the daily? Here, year to date. And here we're going to go utility since we were just looking it up in the intelligence card. So XLU. Bang. I'm real bullish on XLU. So, but let's go year to date as well on the daily. So here, about there. Look at that. Now, does everybody spot what is going on? You see technology. You see what technology is doing. You see what energy is doing. And you see what utilities are doing. I promise you, there's always a bull market somewhere. Big words from Big Kramer. It's always the case. So we just got to find out where does it go, right? So sector rotation is in full play, in full play. So we're gonna watch the tone with oil, especially tonight. So keep an eye on CL for the future. Keep an eye on CL. See how it's gonna open, and just watch the open and see what happens tomorrow. See what it did overnight. If oil gaps up tomorrow, just be careful. Just be careful not chasing. We're bullish on oil. Just we're not gonna chase a speeding train. So we're gonna let the structure confirm and we go from there. Now, what I will say is XLU, I do like. So we have multiple confluences here. Now we have an inverted head and shoulders pattern. It's not fully realized because we still gotta come down some for that, where that can set up either for an entry here with a reversal or a breakout out of this cup and handle, and then we take the move because structure will confirm here, right? So this is a beautiful play brewing, and I like it very much. Now we are already getting a structure test right here. The reason I don't want to chase it is because we already got a bounce, a rejection under the 20. So I'd rather be safe on this play. Let this do the consolidation it needs to do, and we'll break out and take it. So this is very bullish. We'll just wait either for the inverted head and shoulders to realize. We could wait for that handle of the cup to break out. And we also have a daily bullish flag pattern. So we have multiple confluences here. So and even if we can consolidate right here in this handle, I mean this would be perfect, setting us up for that inverted head and shoulders and that 50 to just catch up and give us that rebound we need. So keep your eyes on XLU. These are the top 10 right here in XLU. We have this on the watch list, pretty sure. So keep your eyes on these stocks. But I really like XLU. Any questions so far? Everybody good? All right, I'm gonna take that as a yes. Now, I wanted to point out one thing. I don't want you guys to shy away from building your actual portfolio for your long-term base, right? Build. In times like this, you want to have a strong base built. Get yourself some dividend paying stocks. Get the top 10, SCHD, Vanguard Dividend, VIG. You got JP Morgan, you got Johnson and Johnson, you got Procter and Gamble, Ultimate Consumables. You got Lockheed Martin, they pay a pretty good dividend. You got Realty Income, O, ticker O. They pay a monthly dividend. You got Coca-Cola. Everybody uses Coca-Cola for a monthly dividend, for a quarterly dividend. Coca-Cola Strong. You got Chevron. You got Vanguard High Yield, VYM. Now, my top four personal favorites 5% left. Are these. Charge now. I just mentioned SCHD. I love. You guys have kids. You guys want a long-term, powerful, high yielder. Load up on these shares right here. Just load up. Load up. This will always keep you afloat. Don't keep thinking options, plays, options, options, options. Remember, build. It's the main sniper priority. Build on a strong base. Now, my second after SCHD for dividends is the JP Morgan NASDAQ liquidity. Boom. Boom. They're monsters right here. These guys are monsters. You get every month you get a 46 cents to 57 cents a share. That's good. Just add to this, add to this, add to this. 500 shares, 1,000 shares, doesn't even matter. Add to this. When you see yourself in analysis, oh, I can't find a play. Everything I trade, because you don't have to trade where the market goes. If you're a technology sector trader, trade your technology. Wait for your setup. Right now, it's not the time for you. It's not your time. So now you wait. So now, since I'm in a waiting moment, since I'm on the bench, I'm gonna add to what's important here. This this right here gives you a $6 and a $6.60 per share a year, the total, but they pay you every month. That's big. That's big. Don't neglect stocks like this. My third personal favorite for dividends is ARC, is Heirs Capital, ARCC. Add to this. Add to this. Add to this right here. These shares never go ballistic. They don't go all the way up. They're gonna maintain paying you. These people are massive private banks. They lend money at a high interest to middle market companies looking to grow. So this is a pure cash flow printer right here. They pay a 9.5% to 10 yearly. That's 48 cents per share, $1.92 per share a year. For $17 a share, stack up, stack them. That's wealth. That's compound. Let the years go. They'll drip all your dividends. Don't cash them out right now. You got no business cashing out dividends. Drip it. That's compound. And my fourth personal favorite is going to be Main. That's Main Street Capital. Bang. Right there. You add to this. All these four that I mentioned, they're not that expensive to add. You go to the broad 10, like JP Morgan, J&J, PG, Lockheed. All right, well, to get 500 to 1,000 shares, that's going to cost you. But if you dig around, you're going to find gems in the rough. I promise you. I promise you. Even if you see this head and shoulders right here playing out, this stock, it don't even matter. That's not what they're about. This is not going to move much from the same range all the time. I promise you that. And it's going to go up. This this goes up. This goes up all the time. These people pay you supplemental dividends. So what that means is they already have a 7% plus established for the year. But when they have excess cash flow during that year, you're going to notice your dividend bumps up on certain payments. They give you 26 per share a month already. And it goes up from 420 to 432 per share a year. So they always give you a little supplement just to because they pay the shareholders out. So it's not all about just options. The game is bigger than just options. Sniping is much bigger than just plays. So let's pay attention to this stuff, especially when, let's say right now you having a rough time. Damn, my plays, like it can go in against me. All right, cool. Step away from that. Keep studying a little bit on your option side. Keep studying the plays and keep adding to your ammo here. So I thought that was a very important point to go to. So there you have it. Those are my four favorites: SCHD, JEPQ, ARCC, and Main, MAIN. So
Rams,
now
you're saying
So
SCHD as in dog or B as in boy? Sorry.
SCHD, the Schwab,
D. Gotcha.
SCHD as in dog.
Thank
Yeah. So those are
Rams,
four gems right there. Yeah.
Jared has a question for you.
Yes, sir.
What is your criteria for selecting your dividend stocks?
Well, that right there, those are my four personal favorites right there. I like high yielders, and at the same time, I don't I don't I don't care about share performance per se, right? That's why all of these they're not hundreds of dollars or 100, $150 and keeps going up. So yeah, you can get a dividend paying stock, a company itself, but remember that company itself goes up and down. So now that's going to disturb your dividend pay flow. So when you got companies that just dedicate themselves to paying shareholders because they're more than just a stock on the market. This is a bank that does lending. Another one is Charles Schwab. They're a broker. They're another high bank. So now you pay attention to stocks like this that just pays out to the shareholders. So those are my qualities to look. I don't like buying like Johnson and Johnson. I used to buy for dividends. But I started thinking like what I can add on SCHD for the same amount that I'm buying Johnson and Johnson. And now Johnson and Johnson, yeah, they're great paying dividends, but they're always now you got to run the risk. They get lawsuits. They got the talc stuff still going on. It's just too much to deal with at a high price for that cut of a dividend to keep adding to those type of shares. Even like the JEPQ. So that's a Nasdaq liquidity premium income. So let's say the Nasdaq has been going up. If you look at the trail of NQ, you see the long term base, right? So let me see. So this is what JEPQ does. So the shares of JEPQ go up slightly as you see this growth in the market over time, regardless, right? So you get paid on that end, and they already pay you a hefty dividend amount per month because they're like they do a lot of covered calls. Is what they do. It's a JP Morgan ETF. So what they do is they pay out all the profits into the shareholders. So these are like strong performers that okay, for the last 10 years, right? They've been paying out consistently. That's a great payment. Now when you have holes, when 2 years you were paying, then the dividend gets disqualified for a year, then all right, I don't want to go through that because I'm not gonna add 500 shares to something that's gonna give me a rocky road. So this will compound your wealth, these kind of dividend payments. You can go to VYM. Those are good. Vanguard high yield. But now you might have to pay a little bit more for the shares, like Chevron. Chevron is good. Then you get the icing on the cake on something like Chevron when you got geopolitical tensions. Okay, oil spikes. But now, do you want to build a big position on Chevron on the dividend base alone? That's a question and a risk mitigation that you want to run through your scope. What is the best choice? So for my kids, especially, I like something very stable that I can just keep adding to every week. Every week, no questions asked. Just keep adding to that. Because what matters with these are the amount of shares, not where the stock is specifically here. So, yeah. Did that answer your question a little bit? All right. So now, hoping it did answer his question. So now let's look at some charts. Let's look at some charts and let's get ready for the week. So if you guys want to tell me any tickers that you guys want to watch for next week, and we could do the weeklies on those. So that way you have a clear map of what you're looking at for next week.
Rams.
Yeah.
Oh,
How much did you got that you want to do?
You could jump in at any time, for real.
Nah, I was gonna say I think we should do the well after you're done with the what you're looking at for the week, we should do a participation thing.
Oh, that's a great idea. That is a great idea.
Yeah, where because I want to start seeing other people share their charts and stuff besides me and you.
I agree that that is a great idea. I mean, we can technically jump into that if you want to now because we can whatever they're looking at, we could do the weeklies from there. Or if there is any specific, let me look at the chat. Let me see if somebody's putting anything that they want a weekly on, and we could do a few weeklies. And if not, we can definitely jump into the participation because I would definitely like to see what they're watching
I
too.
got no stocks that y'all are looking at for the week.
hey Rams.
Yeah.
I just been watching QQQ for the from a study perspective. So if you can, that'll be mine.
Okay. We'll do QQQ. I got you. What up, Pat? All right. Good. Bang. on the window. We're gonna need this. So we're gonna map out the week for QQQ. So we'll look it up right here on TradingView. See what we got. Boom. We're gonna look up QQQ right here on Thinkorswim just to get my options moved for March 20. So that's $19.93 is what they expect in QQQ for next week. We got Powell talking. We got a full week next week. So next week is not the week to be going crazy. It's the week to be watching, being nice and patient. All right. So let's get it with QQQ. So now I'm gonna hide this. We don't need that right now. All right, Pat, here we go. So I'm going to get my square tool, go from Monday to the 20th. Bang. Let me go down just so I could get a better snipe on the closing hour. Where I'm at, 9:30. 3:30 is perfect. All right. We're going to color code that. And now we see that we got for March 20th is $19.93. So I'm going to pull out the calculator just to do the math quick. And we got a closing of 593.67 on QQQ. So 593.67 plus a move of $19.93 gives me 613 to the top end, 60. And then to the bottom end, we're going to get 573.74. Bang. Beautiful. So that is the range for the week. So now let's see, once Powell talks, how far can we extend? Yeah. More. Okay. So right here, it's a 567 to the downside. I'm going to clone this box just so I don't have to struggle with the size with it. Boom. My low was 573.74. So I'm going to do the same thing here. 573.74. And then we said it was 0.16 is at 567 flat. A big range. That's a volatile range. Bang. Color code that. And that's the whole bottom of the range that we got for next week. Then we're going to have another clone. And I'm going to shift this to the top for my top side extended. And we're going to go, my top end was 613.60. We're going to match that. 613.60. And then for the top end on my 0.16 delta, we have 612 flat. That lands inside the range. So there's no much upside for QQQ to extend. Let me color code that too, so that's visible. Bam. So that's what we got for QQQ. This is what you want to watch now. Being that structure is structure, and this is what we got, you might see that bottom end realized. Now, if we look at the levels here, you got a support at 587. Then for the day, so you're already sitting at 593.67. So now you're going to want to watch the downside here for QQQ. This is your range. This is your range, and I'm gonna keep the same levels that I have here. The only reason I'm not gonna change to these is because these levels are still being respected. I don't need to go crazy with my levels when they change by a couple cents. This is the area of interest. As you can see, I've had these levels here for 2 weeks. They are still in play. They are still being respected. So you don't just change around just because. You gotta watch the context. So I'm gonna leave this in play because if I lose this important level here, I already know that I'm coming down to this extended edge. So just be careful with QQQ here. You're already at 592, right at the money. So expect maybe a quick dead cat bounce here and possible chop. But if we open nasty, and by nasty I mean tonight, in the futures, you could expect a gap down on QQQ starting tomorrow. And maybe it'll try to come and get filled and drop again. But this is what we got for QQQ. I would be careful here. You could even see it's already below all the averages here. So for the week, even looking at the hour, you're gonna see a bounce, hit that 20, possible rejection. So you want to watch with QQQ here, unless you're moving to the downside, then you might be good. But QQQ is on master watch for this week because this technology sector is about to get volatile this week. That's what I got for QQQ.
I
There's more.
appreciate that. Like so, I just be studying that just to see like chart patterns and up and
Word,
down volatility of it. So I
word.
appreciate that.
Yes, sir. See right here, you have that strong base. That I mean, the strong base. You're following structure. So you got your higher high, lower high, big base, building energy. Boom. Then now you got this 582 level that can really hold you. But you see the moving averages here, and now look at the sudden start. It starts to flip. It starts to flip here, and now flip. So the trend here is starting to decay. We're collecting from supply. And like I mentioned a couple videos ago, I forget which one, but this is a sell the rip environment. So you can see it just by looking at the performance of the chart. Look at that. Every rip inside the range. So now look at the range even better there. So now you see it's cracking. You got that 200 on the daily right there. Got to be careful here. Got to be careful here. Major key point. And look at the weekly move. If you follow the weeklies, look, see, and that's being that I skipped week here, week here, week here. But look at the weeklies moving, giving you the structure on themselves. You got your highest high here. All right, look. Lower high, lower high, lower low, lower low. The weekly itself is telling you the structure is damaged. It's to the downside now. Unless you get a massive flip, you got to get that a Trump tweet, war is over, something like that. And to point out, this war is probably by far from over. So you want to have some hedges. That's why I wanted to bring up the dividend plays. That's why I wanted to bring up add to your shares because this year is going to test you. And if you keep trading options, it's going to test you. And the last thing we want is for you guys to lose money. The name of the game is lose less, win more. You got to win more than you lose. So for that, we got to have real high risk mitigation skills. We got to watch the market and we got to pivot. Anybody else got another one they want to do a weekly on, or we can definitely jump into the participation side to see
Yeah,
what you guys are looking at and what you guys are looking at, how you looking at it.
they they posted some in the
Okay.
chat. Be there's Jared posted one, Lamont posted one, Lakia posted one. Um,
Uh,
before you go though, peace and blessings to all of y'all. Alex, DC, A1, Denise, Gina, Jared, Lakia, Lamont, Pat, Sonny, T. Well. Assalamu alaikum. Peace be upon y'all. But you got GLW or TPR. Jared had put he put both of them. I don't know if you want to just pick one. We don't have that many people in the group, so you probably could just hit both if you want. But
yeah, I'll hit them both.
and we definitely, it would be dope if somebody after Ram's done, if somebody would share their screen and show us the setup that they're looking at, so we could just as a whole go over it. If somebody else in the group besides me and Rams. But I know you're probably not going to do it, right? We're still shy. It's cute. All right, go ahead, Rams.
All right, so
GLW
GLW.
or TPR?
Right. Now we'll do them both. We'll do them both.
It don't matter, Alex. That's ES futures though. That's the big dog. So it don't matter. I just want to see. Y'all like charting. I don't be seeing nobody charts. I'm not in the Patreon no more. And even in the Patreon, I didn't see nobody chart. So it would just be dope to see. And that's how we learn too, by being pressured, by showing our chart in front of everybody. That's how we learn.
Mm-hmm. Now that is a fact, bro. That is a fact.
All right.
Don't be shy to be wrong, guys. It's okay. It is so okay to be wrong here. That's what we always have an invalidation thesis. So we're not. This is not to judge anybody's play. It's not to judge how you enter. It's to learn. So don't be shy.
All right.
All right.
Since my
So
entry on XLE was definitely wrong.
yeah, and that's okay because you're still on the right side. So it's okay if your entry was wrong, and then now you realize it and you go from there. Now you manage the play. So guys, so you guys can see, we can all be wrong, and it's always okay. Is the name of the game.
All right. Lakia
All right,
says she'll do it, but go ahead though, Rams. We'll do
I
the
bet.
participation after you're done.
Word. All right. So we got an $11.57 move for GLW for next week. GLW closed at 129.13. So I'm putting that in my calculator plus $11.57. We get a high of 140.70. 140.70. And in this one, since I don't chart it, we're going to get all the levels and prep the whole chart up. So if you want to follow along so you can prep your chart and watch it next week and see how it plays out. All right. So then to the bottom, we get 117.56. Bang. Boom. That's the range we're working with. So you're either going to break out of that flag consolidation right here. Here, we'll start prepping the chart. So you got this nice flag. Your range. And now you're sitting under, and this is just the hourly. And I like to prep my weeklies on the hourly because you're going to watch the action, the price action the correct way. If you do this on the daily and just watch the price action on the daily, you're going to get 5 bars. So this is to watch the action to see where the probabilities are going for the rest of the week. In this case that you're watching the Corning Incorporated. So this is the range we have for the week. So now let's look for our extended edges and see what they're talking about. So we got a low of 115. So let's clone over here, bring it down. Then my bottom range was 117.56. And I always do that just so I don't forget. So 117.56 is the range that I need to overlap with my weekly move. Boom. And then my bottom range just said it was 0.16, 115 flat, right? So we're going to go 115 as our downside flat. We're going to color code that, make it stand out. And then we're going to get the same clone here and push it to the top. Boom. And my top end here was 147. And then top side 0.16 delta is going to be, let's go 144.25. Boom. Color code that. Bang. So now we got our range for next week. Now we're going to get our levels. So now we go to ramsoffthecharts.com. Place your levels, go crazy. Place 6.
Make sure you show us a quick like 5-minute run through as well when we're done with the participation stuff.
Gotcha. And now we're gonna start from bottom. You know what? I like to start from top to bottom. So let's go like this. We'll go 136.95 for a major resistance point. 136.95. Now you don't have to do this. I'm only gonna do this for visual purposes so you guys can follow along. But I do suggest you do it to your charts as well, because this is what brings clarity to your charts. And you don't have to be guessing around when the chart is on the move. So we're going to get here. That's going to be my second, 134.36. Color code that. These are major resistance points that I'm pointing out here. I put them in red. Coordinates here, 132.07. Write it down here, 32.07. This. Bang. Then we map out our floors. It's gonna stay green. We're gonna go 127.19. Right here, we're gonna go 124.60.
You just
Always
told.
change your coordinates first.
I didn't even know you could do this.
Just put the coordinates and get the level you want. Yeah,
Yeah.
that's gold. Yeah. Yo, when I found out about it, I was mind blown too. Trust me. I was like, bro,
I'm sitting here like, what the
124.60.
fuck? Ben told me this. I'm over here making sure my hand is steady and shit. Trying to get
Especially with
that
that left hand
sense.
right now. 60. Boom, boom, boom. Perfect. And then we're gonna get our major key floor. Support 3, 122.31. Bang, 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 bang. 122.31. 132. What? 22. Nobody tells me no. 22. 31. Okay. And this we're going to make nice and dark green because this is where I expect a reaction. If we were to come down here, if I lose 122, then I already know I am coming to respect this extended edge. So we got a chop zone here. Don't react here because you have no direction. You break above 132.07, that's a flag break. That's good. That's confluence. Now, you confirm breaking above 32 is going to go. You can also fade this move to the downside if this thing just goes. You can fade it because it's going to come retest these key resistance levels, especially 136.95. It will come retest. Too early in the week, fade. If by Wednesday you're still midway, you already know you're working the levels in or out. But this is what we got 4 GLW. And what was the other one that I think he posted two? You really got to be careful here because let me see something on the daily.
It was a TPR, Ram.
TPR bet. All right, so you see, you get that flag on the daily too. You're getting it here too. So watch the flag. Watch the flag. Let me see how long this pole looks. Okay, so even if you were to come down here to this range, test this 50, the 50 will carry you outside the channel. That I'll still leave. I'm very I don't like a flag to come all the way down here. Like there's no way that just invalidates the whole channel of the actual flag. So now up to here where this 50 is and a reversal up, that is still flag in play. So this is good. Even on the daily, you got this flag in play here. You got good volume. You got a little bit of minor seller resistance here, but it's not enough. Say you want to break out from here, from the 50, massive upside. It's retesting that structure on that 50. So want to watch this. This is interesting. Okay. See, on the weekly here, gotta be careful. This is where the move starts to get extended here. So while still bullish, even that volume looks massive. So you still want to be careful here because now
Yeah,
here you're starting to get extended here.
stay on
You're
that too.
starting,
Not to cut your nose, but the
yeah,
the volume. When you're looking at bull flags and bear flags, you want to look at the candles. You don't want huge candles. You want small body candles. So definitely check out your volume. Like in the bull flag, you don't want huge seller. You don't want sellers really stepping in. You want small candles because if you see big candles come in, it's going to invalidate. You don't even have to wait for it to play out. You want it
right.
to be controlled sell-offs.
That was good. That was good. And if you look at this weekly here, I mean, bar for bar, you're getting this. Where's my little brush? Oh, bang, bang, bang. Low, lower, lower, low, lower, low. So you could probably get a fake out of this flag, bang, and a rejection to the downside. So be careful. Looking at this higher time frame here, be careful because you do have some stuff to fill. You have unfinished business right here. There's still unfinished business here. You got the 20. So you want to let this structure play out here. I wouldn't chase it. I wouldn't chase it. So just watch this. Watch this. Watch for that flag and validation. Let's look at the monthly. Wait for the pullback. This is it's overall bullish. It's overall bullish. Wait for a pullback. With this, you want to be patient. So that's kind of a long way down, what it seems, but you let price come to you. Let it at least take this liquidity here, bounce off of that. And if it takes that liquidity there, I most certainly guarantee you they'll wick this. And that's structured. That's structured. Even if you want to liquidate everybody, that's all structure. Still bullish. The rips are being backed by the volume, so you can see it. You need this pullback to happen. A nice pullback for a nice night. Because then what you're gonna do is you're gonna just keep chasing the massive run and get caught up in the crosshairs. Right here, it failed. It failed. The whole run is just going flawlessly. Right here, where you get the massive spike, you get a nice little, I'm not feeling it. And now we couldn't top the last candle from the previous month. So this is a pullback incoming signal. Doesn't necessarily have to happen, but this is a signal that you have to pay attention to for sure. So what was the RT? Damn, I forgot it again. RTW, I think it was, right?
TPR.
TPL or R?
R as in red.
Oh, bet. TPR. Dang. Not clear how that might be removed. Let's try what time from our daily. Okay. This is a war that should not have been started. I agree absolutely. Okay. With Sean. Bouncing off the 50. Let's get a TPR. Tapestry. March 20, $7.21. It's scrambling to figure out how to get out of the war with even a little bit of faith. Boom.
Is that you, Rams? With the news?
What?
The
With the what?
news in the background.
Oh,
the news.
yeah, that's Al Jazeera. My bad, my bad. Y'all hear that?
Yeah.
Yo, that thing be on 24/7 right now in my office.
I'm like, because I'll be watching my YouTube videos. I'm like, I gotta start cutting the background noises
so the replays would be like clean.
Clean, yeah.
That's a lot of fucking news. These past couple of days, like as soon as they shut the market down, the news just started flooding in.
Bro, it's been crazy. What was I missing? Right there. Bang. Oh, Thursday, of course. Bang. Boom. All right. So let's see what we got for Tapestry. Boom. We got $7.21 and we closed at 142.13. 142.13 plus $7.21. That gives us a high of 149.34. 149.34 and a low of 134. Boom. 92. Bang. Okay. So let's clone this. Bang. To the bottom. I'm just going to clone the other one to have it done. Boom. And let's look at our bottom end first. So we got 132. We're going to go 132.25 for our bottom end. 134.92. So 134.92. And what I say? This was 134 flat. Bang. Color code. Boom. Boom. Then we're going to look at the top end. Where's our 0.16? We're going to go, let's do 151 flat. So 149.34. So 149.34. And then we said 150 what flat? Yeah, 151 flat. All right. Boom. Color code. Bang, bang. So that's our range right here. You fail this. You got the 200 as a ceiling right here. You got the high to break structure here. You fail this ceiling. If you run beginning of the week, most likely you're gonna fail the attempt. You're gonna go straight down. Now, if you fail right here at the 20, it's just gonna keep coming down. Now, let me see. Let's look at the long term. Yeah. So you're at that critical zone right here on the daily. You're at the 50. You're at the 50. You're trapped between the 50 and the 20. So you could get a nice little bounce earlier the week. Boom. Crash against the 20 and get crushed in. So be careful here. Now let's look at the levels just to get the scope a little more zeroed in.
Rams, what that means that like your black um candles. I see you got three different kind of candles.
Um, nah, I just got like the purple ones and then the green ones. Just these. These here is just one of my scripts on TradingView. It's called this, the trapper volume trigger and simple moving averages. So what that does is it acts like a MA ribbon. It's a moving average ribbon. So you see, you could place whatever moving averages you want here, right? And then you can color code them how you want, but then this script is not also an MA ribbon, it's also a volume trigger. So what that is the volume spike for bullish is gonna come out this green and then this hot pink for a sell off for a big selling spike. So all that was because I know that everybody doesn't have the top tier of TradingView, but that all that is a volume footprint. So when you look here, you see the only candle that's lit up, and then you look at that footprint. That's the receipt. That's what got bought and sold, where people came and the auction actually closed in those prices on that candle. But that created a volume spike. So now you got 116 bullish delta here. So there was a volume spike. Even right here, you get a volume spike. So what the script does originally is call out wherever the volume spikes inside of the receipt. So let's say you don't have the receipt, you can at least see in between the candles. See, now you get that highlight. Like, yo, there was an anomaly spike here. So and it'll happen to the downside too. So now it doesn't mean every time you see it pink, it's gonna go down. Every time you see it light up in green, it's gonna go up. It's just it's a volume spike. It's an anomaly. So don't it's not a buy and sell signal. I don't want you to get confused. Even if you see every time you see those spikes, it goes to that direction. Spikes, goes down. It's not always the case. It's not always the case. Because you see, this is sellers still tried to push up. So the sellers were here inside of this bearish volume spike. So you also got to read the context. But yeah, it's my favorite script. Like my that I built, it's my favorite. So I use it because I have my MAs with it. I got my SMAs with it, and I use these three as those are my three gauges. But then I also have my EMAs right here, and those are the three that I use. I use the 9 and I use the very long terms just in case once we start failing with that 200, which it happens all the time, I need to know where are my possible dynamic floors sitting at. So that's why I have EMA 400, EMA 800. I got the 200 sitting here. If I wanted to, right off the trapper trigger right here, right? I'll open it and I'll say, all right, let me just give me the 100 and give me the 10-day. But when I put the 10-day, then now I'm over here always around with my 9-day. See, my 9 is an EMA, is exponential. It's more of a magnet, a price magnet. The 10-day, right? It's a little lagger. It's a little laggier. It's a simple moving average. I use them both, but there's some that I use for one thing The others I use for something else. So I just take the 10-day out here because I'm watching the 9 anyways. And as you can tell, they're always around the same place. So I don't need the 10 in my ribbon here. So I just select it off. I like the 100. Sometimes I hide it. There's some things that respect the 100 more than others. You got to look at the instrument that you're looking at and do back tests. Look left, put all the MAs on, or put two MAs at a time. See what MA on the daily, on the weekly, on the hourly, on the 4 hour, what MA is being respected by this instrument the most. And those are the MAs pertaining to that instrument. So when you work that instrument, these are the MAs I need for this because I know the SPY likes the 200. I know it respects it well. Other stocks, they respect the 400. Other stocks have only hit an 800 day, let's say 3, 4 times, but every time out of those 3, 4 times that it's hit, it's been a massive rip. So now, if you're patient enough, you might not go with a trade for 3 months waiting for that setup. And when you do take that setup, now you're massively up, like if you were trading for 3 months straight. So there's different strategies for different trade intents. So the MAs are very powerful. So once you start really digging into the rabbit holes of all the MAs, start playing with them. Just play around and see what follows what. See right here, look, just looking at tapestry, look at the 200. So now say it is. Let me ask you the question, right? Instead of let me finish this before I ask the question, but I don't want to forget the question, please. Somewhere there. So let's say instead of playing around with all this emotion here, right? Bang, oh yo, it's running. Or bang, yo, it's running. Why not just wait? Because you see the data, you see, and now the next time we approach that 200 somewhere, that's your snipe. Because now you can see, at least for the daily, you can expand on this research and go to the weekly, go to so whatever time frame you're looking at, see what it's respecting, and that's when you come check. Because now even here, if you look, now that I'm looking at this um a little more zoomed out, now you got this possibility as well. So you got to see what boom, boom, boom. Get on that 200, boom. So you got these different possibilities here. But now you know that at least this stock TPR, that 200 is it means a lot when we start getting to this area. As you can see here, this 400, okay, just scrap it for now. This scrap it for now. You don't have data to support that right now. But what you do have is one touch, massive rip, one touch, massive rip, one touch, massive rip. It's all about what probabilities the instrument that you're trading gives you. I would suggest just looking at this, be patient. Let that 200 catch up. You're extended. You're already extended. If you really want to be like hard on the analysis, you could say, okay, I like the bullish momentum. I like it. And this is going to be one of those fivefold, tenfold. I bet my analysis is there, but it's only going to be a tenfold when I catch this move. That move hasn't presented itself. March 25, 11. So what it's showing you practically, this needs time of turbulence to reach to that 200, and you're gonna get a nice return on this. You could do the 50, but the 50 gives it more headaches. See, the 50 you gotta watch for a drawdown. So yeah, MAs are very important, very important. But that's what I use, and then MA ribbon just to consolidate because not everybody has where they can put 20 indicators in one shot in your trading view. So now right here, now I have all the MAs I want because even if I go on the settings here, I could get 4 in this ribbon. Then I could get 6 in this ribbon. So now I have 10 indicators in only 2. So is the hack, if you only have up to 5 indicators, then well, I can use 10 indicators in 2 and then get my other 3 indicators going. But yeah, I don't know if the SMA thing was a question, but if it was, did it answer your question or
It did. It answered my question.
word? Bet. So yeah, tapestry. That's what we got for tapestry. Just be careful with this here. If you break this low right here, if you reject off the 50, just watch it. Watch it for all of this right here. 136 level is gonna be crucial for you to hold. And now you could get a bounce right here. This could act as a dynamic support, that daily gap that you have right there, which sits right in the bottom of the extended edge. Then that'll give you a nice little upside. Boom, boom, right? And it can complete your right shoulder. And that's what could bring you to that next 200 level snipe time. You could work your patience with tapestry right here. This is good. Wait till the next time. Keep watching it and wait till the next time that thing hits that 200. See the react. And you'll probably make a lot of money. All right, who we got next?
There was GEV and waste management up there. And XLE was
GEV.
up there too, which I know is on the list.
I bet. So let's go GEV. This is a mover, so the numbers are going to be, you know, $55 move for next week on GEV. Okay. All right. GEV closed at 805.02. 805.02 plus an expected move of 55.03. Big dog. Oh, I didn't even get the. Let's get the range on. Go right here. All right. Bang. Boom. So we got for the top side, we got 860.05. And for the bottom end, we have 749.99. Bang. Okay. Okay. We'll look at it on the daily once we're done here. Because the intraday action is going to be interesting regardless. Clone this. Get these ready for the 0.16. Boom. Boom. All right. So let's go for the bottom end first. Boom. Okay. 0.16 is right here. Far away. 737.50. So we go 749.99 and then 737.50. Our extended edge. Bang. All right. And then for the top end, we got More. Where you at? More. Hey. 870. Whopping 870. Damn. 860.05. $10 over. 860, what I say? 870 on the top end. And that 860, I'm gonna need to see what that was. Orange, bang. 860.05, okay. Bang, that's your range. That is your range. Can it reclaim the 200 day, the godfather of MAs? Can it reclaim? It can.
Power off.
It can. So, look, last time it did that, fake out, reclaimed it. This was a little more of a down draw, but look who caught it. Look who caught it. I must have charted GEV not too long ago. All right. So, let's get the levels for GEV popping. So, let's really see what matters for next week. 2, 3, 4, 5. I'm missing one. Bang. That's my lineup. So let's start top to bottom. 871.36. 871.36. 871.36. And since that is our key resistance, it's gonna go fire red. Right here, we're gonna have 858.30. 858.30. 858. Boom. Boom. Oh, gotta be resonance. Bang. Bang. And we're gonna go here, 845.21. Boom. 845.21. We'll give this a nice little soft yellow, like, yo, warning, warning. Bang. That's what we got. So let's keep working the floors. Where's my line right here? We got, just covering it right here. This thing. 819.06. Lighter shade to a darker one, 819.06. 19. Boom. And we got 806 flat. Oh, put my line. 806 flat. On. And then we got my final floor, 792.91. Maybe 92, 91. Bang. Boom. That's our map. And now, only because that my long-term average down there is calling my name and it's saying, yo, check me out. I need to find out what level relates to this. So again, still going to use ramsoffthechart.com and we're going to see what lands down there on the weekly levels, which will give me a little more authority. So let's see. 749, way too down there. So 749 would be our extended edge. And then we would work. This thing is a mover. So we would use 749 as our extended edge on the weeklies. And that lands as support one on the weekly. So here, let's look at the week. There you go. So as you can see, that level right there, you can see it here too. The 50 is sitting right here. So you can definitely see the reaction at 749.88. You can definitely see it react there. I will go back to the daily and now look. Bang. You're right at that 50 day. Right there. So that is a nice level to be watching for. A nice reaction and a nice structure entry bounce. So wait for the reaction with GV because this is very volatile stock. Very volatile stock. Wouldn't chase it from here. You're in no man's land. I would like to see the reaction at 792 and see if it can take all this liquidity. But that gives you a little bit of short-term upside to ride. If it were to crumble and grab all this liquidity here and bounce off the 50, now you hire your risk to reward ratio and you got a better entry. Definitely watch it here because look at this volume. So you're probably going to get that retest of your 50-day. Buyers are slowly rising. The sellers are slowly rising. Buyers don't got enough juice. So for the short term, maybe wait for that 757 level. Watch the reaction off the 50-day, and you can possibly snipe off that structure point. That's what I got for GEV. Wait for GEV to come to you because these volatile stocks, they don't forgive. If you plan the wrong entry in no man's land, they do not forgive. They will leave you back behind, no matter where you got. Put, call. These things are violent movers, so be careful with GV here.
Lamont said he was watching the 50 MA on the daily to see if it bounced off of it with strength.
Word. That is a good
19.
choice. Yep. Yep. I definitely watch for the same thing.
So now
Reaction off the
we got waste management and then the XLE.
bet.
So WM.
WM. Boom. XLE is gonna be good because I got XLE done.
Fire.
W.
XLE looking good.
Yeah.
And that shit is probably gonna gap up depending on what happens today. These next few hours.
I am in that play. That's why I put that chart.
Fire. Me too. Well, I got shares of it. About to add.
Okay, so for March 20th on waste management, we got a $7.76 move, and we closed at 238.53. So 238.53 plus 7.76. We get an upside of 246.29. Bang. Way too far. I'm about to make a script that does all this. Promise you. But guys, this is what putting the work looks like. This is prepping for the week. 10 companies, 5 companies, whatever's on your watch list, whatever you have active plays. This is what the work looks like. However you analyze, however you chart, what you look at your strategy, this is the work you got to put in every weekend. All right, so what we got for the top side was 246.29. And I'm never gonna stop preaching to you guys because I want you guys to be successful. Minus 230.77. 30.77. All right. Ooh. Yeah. Just watch WM for one more dip because it can happen. Can definitely happen. This really likes to involve itself on that 200. It hasn't done it yet. Hasn't done it yet. And look, it does react at the 4. It does react at the 4. No matter which side you're taking, this is going to react. So that 4 right now without our extended edges is already at the bottom of the range. I got the 4 here. I got the 200 here. I like to wait and see if it can bounce and reclaim and go. Now, you are trapped inside the 50. You're closed under the 20 and you're trapped between the 200 and the 20 and the 50. So be careful here. You got your higher high, you got a lower high. So now you're probably gonna come for this low. Catch a nice bounce. This would be a very, very nice bounce right here. $8 to the downside. That's what should get your attention right there. Now let's look at that extended edge because I'm intrigued. Bang. Let's see what's going on to the downside. Where you at? Bang. Right at the money. 230. 230.77. So that's a 77-cent spread. So 230.77. 230 on the dot. We color code that right there. Yeah, look at that. Look at that 400 and look at that extended edge right there. You can't make this stuff up. So let's see what's going on for the top of the range. That's a spread and a half. All right. So in a situation like this, we're gonna go from 250 and we're literally just gonna go at 248 max. But I still don't like that spread. So we're gonna go 247.50. So what was our top? 246.29. 29 and then 247.50. We'll lower this a hair because that's the reality of the probability. Orange. Got it. All right. So that's the range we got here. We're either going to fill this gap and see how we react, possibly break to a new high, or we're just going to reject this 50 and bounce and chop all week between that 50 and 200. Or there's a possibility where we just reject. We're going to see the levels right now and come and bounce off the 400. So You just want to be ready for all the probabilities so you know when to act, when not. So let's see. We got 248. Let me go crazy putting some lines up real fast. Top to bottom. We got 258.94. 258.94. We'll keep the color code consistent. Hold on. I knew something was up. See? I gotta be paying attention. 248.15. So I should know. 248. What the hell was that? 15. Bang. Keep that color code alive. Bang. Then we got 244.72. Almost had it. 72. 244.72. And then we got 241.19. Bang. Then we go here. Make sure that's consistent. Bang. So now we got our floors, 234.23. 34.23. 234.23. We got 230.79. 230.79. Bang. And then we're gonna have this last floor is not gonna be in our weekly range. So unless something bad happens, we probably won't visit this week. 227.27. 227.27. Hey, that's where that lands. Almost trying to say hi to that 800 day. So this is your map for waste management next week. That bounce at the 200 looks pretty juicy. Won't lie. It looks good. The bounce at the 400 looks even better. Now, that's where structure is. You could either see the reaction at 234, and that's structure. You can see the reaction right at 230. But if it does overextend and takes this low, that's where you got to watch out. That's where you have to watch out. It might just be taking liquidity or it might be changing character. But this right here looks good and prime still. You got an easy uptrend, clearly visible. Let this hit that 200 because right here you don't want to get in right near a ceiling. You got two ceilings here, matter of fact. You got the 50 and you got the level. That's what makes this level even stronger. So be careful getting in the middle of any zone. So right here, there is no move until further confirmation. So it's either we break above and get on top of this 50 on the level, hold, we can go for some upside. That's a $7 spread you could get yourself. Aim for this liquidity right here. Aim for the gap fill. you make yourself some money, but you got to be patient here. There's no confirmation here. You're right under the level, which turns into a bearish sentiment. Anything below a level is bearish. Anything right on top of a floor is starting to turn bullish. Chances are we're going to bounce from the floor. Chances are we're going to reject from the center. Unless we break under, we break over. Now we look for continuation. We look for strength. We look for who's stepping in, who's stepping out. But right here is no man's land. No trade until further confirmation. But watch it here because you're in the middle of the chop zone.
Lakia says thank you.
You're welcome.
And now XLE.
XLE, that's right. Okay. All right, so XLE we got right here. So XLE, I would like to get in myself as well. So what I would like to wait for is give me that 50-day. I want this reaction right here for a starter. If we were to fail, I do have my 100-day, which XLE does like to respect. So I do like this 56.44 area. This whole $56 area right here, I do like. Now, if you do just break and go from the situations that are going on this weekend, this is not where we chase. This is one of our majors in the sniper watch list, but this is at the same time not where we're just gonna chase a gap up. Whoever's in position, you're gonna reap the rewards. And those of us that are not, we're gonna wait for structure to present itself again. And then some of us others will snipe. But if it does gap and go, don't get crazy. And well, Ab is in the play. I'm getting in with Ab. That's not what we want. We want swift entry for you guys. Ab's been in the play. He's been in position. So if this gaps and goes, we just wait.
I
It will
got
give
in
us
at
that.
55.10.
Nice.
That's
Let me
fine.
see. Hell yeah.
Or you chilling. That's a great
Woo.
entry.
Hell yeah. So you in. You in position. So if this thing gaps and goes, you in position. So congrats to that. So this
You in
is
the
actually
options play? My bad, Brams.
no, you're good.
You in the options play in that XLE play?
Yeah.
All right. What's your strike?
Hold on. I gotta double check on that. Give me a sec.
Lakia too? What you in, Lakia?
$60.
Yeah, I like that's the spot that I like.
I had a 50 and 50-cent call.
A 50?
Yep.
Yeah, you about to get money.
Hell yeah.
Damn. Pat got in at 50. Sheesh.
Yeah. Snipers. 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 So that's what I got for all the stocks that we had on the chat for the weeklies. But now it is a good time to jump in if anybody wants to do the participation, so that way you get a little practice, and we can see what you're watching as well.
Oh, Lakia already said she'll do it.
Word. All right, hold on. Let me return to the